Hi guys, let's resume accounts class. Now we are going to take a huge and big topic in our syllabus, important for your exam also. Three accounting standards, AS 21, AS 23 and AS 27 put together, we have a topic called consolidation. When I was a CA Inter student, consolidation was not there in Inter, it was only there in final. Earlier syllabus, they only bought AS 21. Now in the new syllabus, they have added 23 and 27, which is basically AS 21 is consolidation of subsidiary, 23 is consolidation of associate, and 27 is consolidation of joint venture. These are the two new additions. We will be learning from scratch. But when I say learning from scratch, there is one topic that you should know before itself, prerequisite. Anybody watching this, I want you to be aware of Schedule 3, format of P&L and balance sheet. If not, go and watch that classes recording if you are seeing, or revise the format, because our final answer is preparation of balance sheet in Schedule 3 format. We are not going to use T format. So you should know that format. Are you following, guys? Okay. Before I get into the chapter, it's a huge chapter. We have about, in the study mat itself, 30 sums to solve. So this itself will take 20-25 hours all put together. Big topic, or even more or less. I'll go in the flow. Okay. I can even do it faster if you're understanding. So let's go. You guys will tell me if you're understanding. How many of you are studying consolidation here for the first time? How many of you already know consolidation, at least subsidiary? Doesn't matter. Revise, because the method how I am going to teach you subsidiary is going to be different. It is going to be as per ICA study mat. Okay, different means I am going to simplify it with steps, and then we'll go to 23 and 27. Okay, perfect. First, before I go to the chapter, some basic questions as to why consolidation. Okay, what is consolidation? When it will come? Some basic questions. We have to understand all of that. So next to 1 hour is going to be about understanding the concept of consolidation. In the concept that we will understand how do you do these sums. Let's say I have balance sheet of holding limited. Let's say for example Adidas. Adidas has share capital, let's say 100, reserves and surplus 50, other liabilities 200, balance sheet total is 350, here also 350, property plant equipment 200, investment in Reebok, which is my subsidiary, 50, and current assets others are 100. Are you following, guys? Let's say I have done a 100% investment in subsidiary. My subsidiary limited is share capital 50, because I have invested 50, correct? Then apart from that, liabilities, let's say 30, here assets, let's say it is 80. This is how my subsidiary looks. I am not going to teach you what is a holding company and what is subsidiary company in advanced accounting. Go to your law class. Everybody knows what is an holding, what is a subsidiary. Same definition. What is holding and subsidiary? Controlling more than half of the voting power or composition of board of directors of other company, I become holding. Now the question is, why should I do consolidation? What is consolidation first of all? Consolidation means, in simple terms, I have two balance sheets. I have to add these both and make it one balance sheet. That only we are going to learn in this chapter. All the sums will lead to that, adding two companies' balance sheets into one. But why should I do that? Learning what we are going to do is next 15 hours. But why should I do consolidation? Anybody? Why, sir, consolidation? Did you ever get a doubt if you already know the topic? Why? Okay, if you invest here, so Kalyan is saying, sir, you are investing in Reebok. Whatever profit Reebok is earning is mine. Anyway, Reebok will pay dividend. That dividend only is my profit, correct? I decide how much dividend should come. I am the holding company, I can vote, correct? So I will declare whatever dividend I get, it will come back to me, no. It will add to my reserves from subsidiary. I will pass bank account debit to income statement, dividend is received. Why consolidation for that? This assets and liabilities also are mine only. Okay, let me give a example. Let's say you have investment in shares of Tata. You purchased 10,000 rupees worth of shares today. Okay. Now, just because you have shares of Tata, can you control what Tata can do? Do you have the decision? Do you have the power, guys? No. You have only 10,000 amount of shares. That could be 0.000 some percentage of Tata. Nothing I can do. Sir, I can vote in AGM, but your vote will not pass a resolution. It's like I can vote in election, sir, but what's the point? Are you following? It's like that. I will vote, but what is happening? Control is with somebody else. Are you following, guys? Okay. So same way here. So these are normal investments where I don't have control. But here, investment in subsidiary means this 50 where you have invested represents assets of 80 minus liability of 30. That means I have full control over these assets. I have full control over this liability. If I want, I can sell those assets, correct? If I want, I can incur more liabilities. So, the standard says, in places where you have control, show the shareholders of the holding company what that control looks like. What that control looks like. Replace this value with the control you have. This represents what assets, what liabilities. That's the one of the core reasons as to why you do consolidation. Meaning, or in very simple terms, in very layman terms, let's say, for example, let's say we'll take Anjana is the shareholder of Adidas. Who gave money to Adidas? Anjana. How much he gave? 100. Now Adidas is a separate legal entity. Taking this 100, out of that 100, Adidas is investing 50 in some other company, and now Anjana is coming and saying, hey, what happened to my 100? I am saying, look at this, your 100 is here, but 50 out of the 100 is in some other company. Are you following up? Then she is saying, okay, so Anjana gave 100. In this 100, my company is Adidas, for which she can see the assets and liabilities. She is saying the other 50, you invested in Reebok. What happened to the assets and liabilities? I want to know whose money it is. Anjana's money. So she wants to know what happened to the money. I am saying, don't worry, Anjana, you have control over Reebok. Hey, what are those assets and liabilities? I want to know. If I can know for 150 which I gave, I want to know for the other 50 which I gave, why did you invest in some other company? Show me the status. Show me the position. Are you understanding? With this logic, I am introducing a chapter consolidation, the need for consolidation. Put yourself in Anjana's shoes. Will you want to know what happened to that money or not, guys? That's why consolidation. Later, don't ask me why chapter is difficult. You only told me you want to know. So we have these 3 standards. Clear? Okay. With this, the next set of discussion, I am going to do only the first part. Let me tell you what all consolidations is there first. Holding to subsidiary, holding to associate or joint venture. You know what's associate, you know what's joint venture. Anyway, I will revise when I go there. Or holding with combination of subsidiary, associate, joint venture, or holding with multiple subsidiaries and multiple joint ventures. Are you following up? Or holding with S1, S2. S2 has associate, S1 has S3, Then there is joint venture. Can you see the complication here, guys? Holding with S1, S2 joint venture. S1 has S3, associate has S2. What? S2 has associate. And or we can have like this. Holding simple S1, S1 has S2. Sir, what sir? Still let me draw. Holding has in S1. S1 also has in holding. Cross holding we call this. Holding has in S1 70%. Subsidiary has an associate 30%. So only one holding. This is called cross holding. Or holding has in subsidiary. Subsidiary 1 has in subsidiary 2. Subsidiary 2 has in holding. This is called triangle holding. Sir, more like this I can keep drawing, guys. Can you see, guys? So I have to do for each consolidation differently, and for all of this, whatever I drew above, change in during the year, the percentage changes. Are you following, guys? During the year I made rights issue. During the year I made bonus issue. During the year my control increases or control decreases. Can you see the complication, guys? But fortunately, you don't have all this in syllabus. Okay, not there in syllabus, not there in syllabus, not there in syllabus, not there in syllabus, not there. Oh, this, sorry. Not there, not there. This kind of double subsidiary, triangle, cross, all this you will learn in CA final. For now, you just have separately holding subsidiary or holding associate, holding joint venture, or holding with one subsidiary, one associate, one joint venture. How do you do it? Are you following, guys? So you have basics. So what you are learning in consolidation and inter is just the teaser. Is what, guys? Teaser. The movie is going to come in CA final. Okay. So this is just the teaser. We are going to learn. So I am just giving you structure of the chapter. What is the chapter? What is in your syllabus? And trust me, what's in your syllabus is easy. Okay, you will tell me in the end of the chapter it's easy or not. Clear, guys? With this I am done with why consolidation. What are the types of consolidation and what is in your syllabus? Fine, guys. From now, in the last 20-minute discussion, what is relevant for exam? Nothing. You learnt why consolidation. Because why consolidation, you will learn how to do it. Now we are going to get into the exam sums. Okay. Remember, consolidation is nothing but line by line addition of holding and subsidiary. I am going to give the same example, but 4 to 5 cases. Each case is an exam problem, and in each case I will introduce one new concept. Are you following, guys? Understanding of clear? Example 1. We are going to have 5 to 6 examples. You understand all the examples. First chapter AS21 over. Promise. AS21 will be over. We can straight away go and do all sums. Example 1. Holding, keep in mind as Adidas. Subsidiary, keep in mind Reebok. Okay. Let me write subsidiaries balance sheet first. Property, plant, equipment 100. Current assets 50. Balance sheet total 150. Other liabilities 70. Share capital will be how much, guys? 80. Are you following, guys? In our first example, Adidas wants to buy 100% of subsidiary. I want to buy the entire subsidiary, not amalgamation. Buying the shares, but both entities will still continue. If you are the advisor, how much will you pay to buy this company? Yes. What do you think is the correct price to buy subsidiary, which is in our example, Reebok? Let it be in lakhs or crores. How much will you pay? Yes, your name. Yes. Rahul, one more Rahul. Yes, Rahul, how much will you pay? 80 will pay. How? Why 80? So he is saying this company's share capital is 80 I will pay only 80. Or in other words, Rahul is trying to tell, if I buy this company today, I will get assets of, but I will also get liabilities of 70, assuming book value is the fair value. If he sells the entire company after buying, he will realize 150, he has to pay 70, he will be left with. So something worth 80, you are paying 80. Those who studied amalgamation will understand net assets. Net assets in book value, correct? So to buy Reebok, you are paying how much, guys? 80. Basically book value of the assets, net assets, correct? So what Rahul suggested, are you all agreeing, guys? So Rahul is saying, I will invest 80 in this 80 and become a 100% holding, full control with me, nothing to others. Are you following, guys? Let me fill the other values at random. I am going to use the same numbers in all the examples. You will tell me, I will only introduce and change small numbers. Here PPE, let's keep it at 200. Current assets, let's keep it at 120. What is the balance sheet total here? 400. Sir, how numbers came? From my mind, randomly I am writing. Okay. Here, share capital 200, other liabilities 200, total is, or if you feel I want it to be different, so then only I understand, keep share capital 100, other liabilities, anything is fine. Are you following, guys? Which one do you want to keep, 100, 300 or 200, 200? Which one? Okay, I will keep it as 150, 250. Okay, fine. 150 and 250 is my values. Are you understanding, guys? Okay. Now I told you consolidation is nothing but line by line addition. Left hand side plus right hand side, 1 plus 1 becomes, 1 plus 1 is what, guys? 2. Okay. So I am going to write now H plus S. With me, guys, we are doing consolidation. Let's first write the English, guys. Same share capital, other liabilities, PPE, investments, current assets. That's why I didn't keep detail. I just kept the broad category. I told you consolidation is nothing but line by line addition. So let's do one by one. PPE here 200, here 200 plus 100, how much, guys? Very good. Next, investments 80 plus, here how much is their investment? 0. So 80 plus 0, yes, 0, someone told me 80 plus 0 is 0, 80. 120 plus 50, how much? I am doing it for a reason, guys. You will do this for all 30 sums. Consolidation is nothing but line by line addition. Then share capital 150 plus 80, this 80, how much? 230, let me write it. 150 plus 80, 230. First I am doing what? Line by line addition. Other liabilities 250 plus 70. So 250 plus 70, 320. My balance sheet total is 550. Is it tallying, guys? Hey, it should tally. What you did? Nothing you did. We just added both places. This is the first step in consolidation. But what do you feel odd over here? What do you feel odd even though you didn't study or this chapter even once? Look at this. In maths, we take common, correct? If I say 7 into 5 plus 7 into 4, you will write 7 into 5 plus 4. So I take 7 common, correct? Here, same way, if the assets and liabilities have something that is common which can be knocked off, why to write in both places, correct? So can I say this 80 which I have invested in shares of subsidiary is nothing but an 80 sitting here, correct? Can I cancel both? Cancel, left hand side, right hand side. So like that, can I cancel, guys? Yes or no? See here, effectively, What is the capital available for the holding? 150. With the 150 only, this 80 was born, correct? So, can I say this 80 is inclusive of, or in other words, 150 is inclusive of 80, correct? Yeah, let me repeat. H Limited got 150 first. Anjana gave 150. With this 150 only, I invested 80, correct? But if I add both, the user will think Anjana gave 230. Is it true and fair? Are you getting the logic? So the logic is the available capital is 150 only. How can you add 80 and tell it's 230 when 80 is inclusive of? That 80 is part of 150. That means I have to remove that 80. So if I cancel, let's say one side, if I cancel 80 here, this becomes, this 230 will become 150. Now we will revise the balance sheet. I am going to erase this and write, so you can see it right here. Instead of 150, instead of 230, this will become, and instead of this, it will become 0. My total will be 470. Consolidation over. That's it. So consolidation is nothing but line by line addition, and then whatever is common, eliminate. Are you following, guys? What's consolidation? Repeat with me. Consolidation is nothing but line by line addition and removing the common. Don't write an exam for you to understand. Line by line addition and removing the common things which doesn't make sense. I am explaining logic also why it doesn't make sense. This is example number 1. First example. Now I am going to take this further. Again, let me write example number 2. We are going to do 5 examples. Each example I will introduce a concept which is part of our syllabus. Holding limited, which is our Adidas. Same numbers. Share capital, how much, guys? Other liabilities, 400. PPE, then current assets is investments 80, total is 400. Nothing new, I am using the same values. Now we are buying what, guys? S Limited, where share capital, in our example, share capital was 80, then other liabilities was 70, PPE 100, 50. This example is correct if you invested how much, guys? 80, correct? Now, let me give an analogy for you to understand. I have a cricket bat, which is an English willow, proper. You can use an international match, you can play with it. It's a proper international standards bat. How much will you pay for that? 5,000. Anybody else? 5, 10, 15, 20,000. That is the usual rate. Depends on which grade of willow you get. Okay. Now, same bat, Dhoni signed. Same bat, used bat, Dhoni used for 10 matches, hit 100 also in that batter, and he signed, including one duck out also, duck out 100 and signed. Now, how much will you buy that bat for? Imagine you have unlimited money. Yes. Lakshita is saying 2 lakhs. Anybody else? 5 lakhs, Kalyan. So, same bat, the 2 worn out bat, you are paying 5 lakhs. Why? There is some goodwill because of Dhoni and there is some fair value. That means book value of the bat is X, but the fair value is 5x, 10x, 20x, correct? So, are you following, guys? Same way here, unlike previous case, Rahul told, sir, I will buy for 80. Buy what? Buy this company's 100%, he wanted to buy for 80. Do you think the company is a fool to sell the company for 80? But instead of selling for 80, I can myself close the company and get 80 rupees. If ST Limited is going to close down today, they will get how much? 80. If I am selling, why should I give 80? Are you following? I will charge a higher amount because of some value I possess outside my books. Correct? Are you following, guys? Understanding? Or in very simple terms, maybe the book value of PPE is 100, but the fair value could be 130. They have not done revaluation. So how much you will pay in this case? 130 plus 50 minus 70. How much you will get? 110. Are you following? You can't pay 80. You have to pay 110 because the asset is not worth 100. It's worth 30 more. 130. Basically, I am now computing net assets using fair value method. Fair value of assets minus fair value of liability. So now let's say Rahul has agreed, sir, I will buy this company for 110 instead of 80. The only change from example 1 is 80 becoming 110. I could have finished it in like this, but logic. Why will you pay more? Because there is some value there. Following, guys? Okay. So now again we have to do same thing. Sir, if I pay 110, how will the balance sheet tally? It's not tallying on my asset side. So if you paid 110, you paid 30 more. That means what should reduce? Your cash will reduce. So instead of 120 current assets, it will be 90. Now it will tally. Are you following up? See, earlier it was 80 and 120. Instead of paying 80, if you had to pay 110, then your current assets will reduce, including cash. Are you following, guys? If you were able, if you had the doubt, sir, it's not tallying, good. Anyway, I was getting that. This is my example 2. Now again, let's prepare consolidated balance sheet, guys. Consolidated balance sheet, H plus S. Give me the first variables, share capital, then other liabilities, PPE, investment, same thing, add and add. Share capital 150 plus 80. Sir, 150 plus 80, 230. Sir, you can cancel. No, sir. Wait. First, we will do step by step. First, I will use what? Add. Next, other liabilities. 250 plus 70. 320. 320. PPE. 200 plus 100. 300. Correct? 200 plus 100. Investments. 110 plus 0 and current is 90 plus 50, 140. Check if this balance sheet is tallying. How much? Tallying. Everybody understanding till here? Now only the game starts. You all already know this is not 230. It doesn't represent 230. It includes 80, which is double added. It's like adding it twice. So I have to eliminate. So here I will reduce 80 and now instead of 230 I will write how much? 150. Super, sir. But this side I should match it, correct? I can't reduce 110 here. Here I am reducing how much? 80. So here also I can reduce only 80, correct? Are you following, guys? So how much is left? What is this 30? 30 is left. Can I call this 30 as balance investment? No. Investment only is replaced with share capital. Both knock off the entry, you pass this. Equity share capital account debit to investment. Investment full value of 110 is written off with 80. That means there is still one 30 which is left over here. What is that? You already know the answer. What is that? You, for an asset worth 80, for a subsidiary worth 80, you paid 110, you paid more not to buy the asset. In amalgamation, we call it as goodwill because you purchase. Here you didn't buy. Here you purchase the shares, still the entity is there. This is the extra 30 you are paying to gain control over the entity, correct? So this 30 is actually called, colloquially in book also we can use the term as goodwill only. It's goodwill only. But the standard doesn't use the term goodwill. Study math uses goodwill. But the standard uses the term, this is the cost I am paying. Dhoni's bat I paid 5 lakhs to get it into my hands. Now after paying 5 lakhs and getting Dhoni's bats in my hands, I can break it, I can do whatever I want with it, correct? Now I control that bat. Now this 30 is paid extra to control Reebok. So this 30 is technically called the cost you are paying to control. Cost of control, in other words goodwill. Can I use them interchangeably? Will I get marks? Yes. You can write goodwill or you can write cost of control. In balance sheet I will write goodwill. Notes I will write cost of control. Are you following, guys? So new term we have learned, cost of control, nothing but goodwill. Understanding, guys? Sum over. Consolidation example 2 over. So investments, if you want to look at how the balance sheet will look, my new balance sheet will look like goodwill 30. Balance sheet is it tallying now, guys? What is the total after setting off? 150 plus 320, 470. Here also it should be 470. Are you following, guys? Hello? This is case 2, where you buy the subsidiary or acquire subsidiary's control at a price higher than book value. Can we proceed, guys? Hello? Stage 3, example 3. Yes, doubt. Why can't I add 30 to PP? No, Vignesh is doubt. Other Vignesh, guys. Why can't I add 30 to PP? If I add 30 to PP, does it make sense? The available PP with me is 200 and 100. So are you trying to say PP includes intangible assets? No, after evaluation 200 plus. No, okay, his question is, sir, why can't I do revaluation of asset and instead of writing goodwill, I will write PP at 330. He is saying, why can't I show a PP at 330? Because the actual value is increased value in asset. In this example, I told you increases because of PP. In reality, it could be combination of multiple things. We can't exactly point out this is the excess paid, correct? It could be goodwill, it could be asset revalued, it could be multiple asset revalued. And to give a actual justification, all that revaluation is happening in whose books? Subsidiary books. Now I am preparing consolidation in whose books? Holding books only will prepare consolidation. So revaluation, even if you do, it will be happening only in subsidiary books, not in the books of holding. If I do revaluation, if subsidiary chooses not to do revaluation, then when you again go back and prepare this books, what will happen that time? Are you following up? I will come to the time when should I prepare consolidation is next. Let me do the last example, example 3. This you will do. Quickly give me the values, guys. Share capital 150, other liabilities 250, total is 400. Here PP 200. This time investments, last time we saw above 80. This time we will see below 80, 60. Therefore, current assets will be how much, guys? How much? 140. Current assets will be 140. Total is 400. If you look at books of subsidiary, looking at books of subsidiary, share capital same 80, other liabilities 70, 140, 150, PP was how much, guys? 100. Same values, no change. What is the only change I did? First case was 80, second case was 110, now it became 60. This is my third case. Now we again have to do what, guys? H plus S. So I will write here H plus S. We will call that as consolidated balance sheet. After this I will tell you when consolidation takes place. H plus S. So let me add 150 plus 80. Share capital 230. Other liabilities 150 plus 250 plus 70. 320. PPE what plus what, guys? 200 plus 100. First you do line by line addition. Investments 60 plus 0. Current assets 150 plus 140 plus 50. 140 plus 50, 190. My balance sheet total 550. All cases balance sheet total, first time it won't change, then only later it will change. So line by line addition is completed. Recording, repeat with me. I hope you guys are writing this in the notebook. Otherwise, you can't afford to spend the time again watching this. So again I have to do now what, guys? Set off. This 60 I will cancel, and this is 150 plus 80. Now I will minus 60. But I will still have, instead of 230, you will now have 170. Are you following the third case? Does this make sense? No. I told you share cap, it makes sense in cancellation, but logically if you see, how can share capital be 170? Because Anjana gave us only 150. Anjana gave Adidas only 150. So what I have as capital for the whole group cannot exceed what I received. I have 100 rupees with me. I can't give you take until I have 500 rupees. No. What I have is 100. So that means my share capital should be 150. But if I knock off, I am getting 170. So I have a difference of how much, guys? 20. Last time 30 came on asset side. So you wrote goodwill. This time 20 is coming on liability side. What's the meaning? Everybody are saying capital reserve. In simple words, Dhoni bat is 5 lakhs. But Dhoni is saying, I don't want to sell it. Do you want to buy the bat? I'm saying yes. Give me 1000 rupees. That is the book value. I will give the bat. So a bat which is worth 5 lakhs, I had the opportunity because of my luck to buy it for 1000 rupees. So I made a profit of 4,90,000. Will I make this profit every day? First of all, buying the bat is not everyday thing. So this profit is called capital profit. So I will transfer it to capital reserve. Correct. So if you go back here, this business is collectively worth 150 minus 70. How much? 80. Correct. 80 worth of business you are paying only. You got a discount. The discount is a gain. Where will that gain go? Capital reserve. So 20 is capital reserve. Consolidation is done in 3 examples. So basically I took 3 scenarios. Same as book value, more than book value investment, and less than book value. Are you following, guys? Hello? Understanding? In a real sum, they will give you holding and subsidiary details. You have to prepare this consolidated balance sheet and do knockoff. That's all. That's all consolidation is. Of course, there will be here and there small adjustments. Are you all following, guys? Are you all with me? Okay. Now, hold on 1 second. This is the consolidated balance sheet. Now you might have a doubt, sir, this is the start of the year, April, let's say 24. This is the end of the year, March 25. When should I do the consolidation? Start of the year. middle of the year or end of the year? End of the year. You need to because I am reporting to my shareholders for the period April to March. It's called consolidated balance sheet. So when you prepare financial statements 31st March, on same day, wherever applicable, I will prepare consolidated financial statements. So all the values I took in all these examples are values on date of consolidation. Are you following, guys? Still long way to go. Are you understanding? Hello? Okay. It's on the date of consolidation and not a previous or after date. Are you following, guys? Let's proceed. We'll go to one or two sums at this stage. Consolidation is in your module 2. I'll tell you which sum is correct to start off with. I'm just seeing if we can solve one sum in the current stage. Okay, all the sums is not full percentage. Let's proceed further, guys. I need to give you more 3 or 4 more examples. This chapter is such that only if I teach the whole chapter, we can straight away start doing the sums. So far easy or difficult, guys? Now next, let's go to next level of examples. Example number 4. Example number 4. Same holding, same numbers. Share capital is 150. Other liabilities here PP 200. Investments, let me fill. Current assets, okay, let's write this as 80. So this will be 120. Total is 400. S limited also same values, no change. Share capital is same 80. First case same 80. Other liabilities, okay, same example, just like example number 1. Are you all with me, guys? Okay. In this example, what's happening? I did not control 100% unlike the previous 3 examples. You are gaining control of only 80%. That means you didn't buy the entire shares of S. I purchased only 80%. Possibilities there are still I am holding. Holding means more than half. So I purchased only 64 by paying 80. Are you following? I purchased only 64 by paying. This is the only difference. Let's do the sum. Let's do the sum. We have to do line by line addition. Holding plus subsidiary. Share capital, first let's write everything. 150 plus 80, 230. Other liabilities, 250 plus 70, 320. Of course, multiple times you will write. I want the same number, so it will be easy for revision later. PPE will be 200 plus. Then investments 80, current assets 120 plus 50, 170. Are you following, guys? We'll write the total later. Now in a normal sum, example 1, what did you do? Striked off 80, striked off 80, and here you wrote 150, sum tallied, consolidation is done. Yes or no, guys? Loudly, hello. Here can I do that? Yes, and here, if you can do it, now follow. What is the challenge over here? If you see, if you do this, I paid 80 to buy only 80%, which is 64. That means 80 represents 64. Correct? So, first of all, addition itself is wrong. How can I add 250 plus 70 when what belongs to me is only 250 plus 70 into 80%? When what belongs to me is here 300 is nothing, sorry, not 300, it is 200 plus 200 is mine, but in the 100 what belongs to me is only, see, end of the day I have to show Anjana, the investor, how much of the money that you gave, how much assets I bought. Correct? So I should show only 100 into 80%. Now I am giving you two options. We have not yet gone for cancellation. We are only going for line by line addition. This is method 1. Method 2 of line by line addition. Follow. You should tell me which is correct. Share capital will be how much? 150 plus 80 into 80%, which is 64, which comes to how much? 21. Are you understanding what I am saying, guys? What belongs to me is only 80%. Next, other liabilities 250 plus 70 into 80%. How much? Total 2306. Are you understanding the logic, guys? Asset PPE 200 plus 100 into 80%, 280. Then investments 80, I invested full, it is holding company share. Next, current assets, where is that? 120 plus 50 into 80%. So I will write 120 plus 50 into 80%. How much, guys? 160. Check if it's tallying. It should tally. Hey, come on, I did same both sides. How much are you getting? 520. So this is method 2. I am not telling you which is correct. I want you to pick what you feel could be the correct. I am just telling you. First method, hey, add everything. In adjustment, I will take care. When I adjust, I will take care. Second method says, no. You see what this 80 represents is only 80%. So you add only 80%. 80% everywhere. Why are you adding what doesn't belong to you? See, if I show 300 here and if I show PPE 100, Is the 100 mine? No. Out of 100 only 80 is mine. Only if I show 280, the shareholder Anjana will be satisfied. Okay, sir, 280 is my asset. If I show 300, she will think, oh, 300 is mine. Are you following, guys? Are you getting it? Which method? How many of you? Method 1, sir. Method 1 only I will choose. How many of you? Method 2. Those who are watching recording also. Method 2. Method 2 is the wrong answer. As a faculty, I can teach however I want to convince you that this is the answer. Are you following this? I can teach however I want. How I give explanation, you will, okay, you understood. Are you following, guys? Are you getting it? Now, logically you are right. Method 2 is correct. But why the standard does not prescribe this method is, even though what belongs to me is 280, you have control over 300. Consolidation, holding. If I want to sell the asset, I can sell the entire 300, correct? Resolution 80%, I can do whatever I want. So even though there is another 20 which is not mine, effectively I control that. Are you getting it, guys? It's not mine. When I sell it, I will not get the 20 for me. It will go to others. But the decision what to do with that balance is mine, because I have control. So I will tell Anjana, see, this is what you get, but you have, with the money you gave, I control all this. So show the shareholders what you can control. Are you following? Hello, are you understanding, guys? Sir, then why, sir, this method you wasted time? No. This method is applicable when you do consolidation of associate in AS 23 and joint venture later. There they are saying you don't have control. You have only 20%. So don't do in the total method, do in the percentage method. So when we go to the consolidation of associate joint venture chapter, the institute recommends this method. It's called equity method. We will get there and we will learn. Are you following? Are you getting the difference? So here I will add everything. Get the logic, guys. So now why I am choosing this method? You control all of this. I control all of this. So now let me just write the relevant numbers so that you can, it's clear. Method 1, I am going back to method 1. PP 300, 250 plus 70, 320, balance sheet tallies with 515 both sides. So isn't this same as example 1? Yes. If you see example 4 is same as example 1, but I am telling you what's the right way to do it. Now, how to set off is the next question, correct? This 80 represents only 80%, which is nothing but share capital of. So if I knock off, I can knock off 80. Yes, I can knock off. I have to knock off 80 because 80 only is replaced with assets and liabilities and share capital, correct? See, this 80 is only replaced with all of this. So I have to knock off this 80, but when I am cancelling in shares, I can't cancel 80 because this 80 represents only 64. So I can cancel only 64. Are you getting that logic, guys? Because 80 represents 64. So I will cancel 64. My revised share capital will now be 150 plus 16, which is 166. Are you following, guys? Sir, 150 I understood, sir. In this 166 I understood. Very much I understood. What is 150? What about that 16? How can my share capital increase by 16? I told you the available money is only 150. Now, so remember a standard rule in consolidated balance sheet. In what, guys? consolidated balance sheet, your share capital will always be holding company share capital, that is 150, because the money available is only 150, it cannot increase. But in this scenario, I am getting 150 and 16. So I have to now drill down and find out what this 16 represents. So I will cut 150 and write 166, I will erase, sorry, and I will write 150. So I have a 16 which is a balancing figure, correct? What is that? What is that? Is it gain? Is it capital reserve? No. You didn't get any profit. So what is that? What is that, guys? In other words, now coming to the core logic over here, even though my asset is, now can we find out that part of assets and liabilities which is not mine? Here 100 is not, in the 100 what is not mine? 20%, correct? So let's write down, in the 100 what is not mine is into 20%, how much? 20. What is not mine? Plus in the current asset of 170, not 170, 100 plus 120, 120 plus 50. So in that 50, what is not mine? How much is that? 10. So in my total assets of 550, what is not mine is how much? 30, correct? Similarly, in the liability side, look at this, liabilities how much, guys? 70. In this 70 liabilities, what is not mine? Into 20%, how much? 14. So what belongs to the outsider in my balance sheet, because I am doing a total approach of adding everything, because I am adding everything, I need to show I control everything, but everything doesn't belong to me. Are you following up? I control this 300, what to do with the asset, but the 300 if I sell, what doesn't belong to me is 30, this belongs to the 20%, correct? So what doesn't belong to me in the asset side is 30, guys. What doesn't belong to me in the liability side is 14. Therefore, effectively 30 minus 14, what doesn't belong to me is 16. This 16 and this 16, same or different? Same. That 16 only is this 16, but instead of doing this detailed computation, when you knock off, automatically and beautifully you will get this 16. This 16 is part of my balance sheet which is not belonging to me, which belongs to the other shareholders. How much percentage they have? 20%. I have 80%. So I have 80%. So I have full. So I am called the MAJ. What is that? I am the majority. So that 20 is the minority. Correct? Correct. So even in this class, let's say I have 80% power. You all have 20%. Even with 20%, what you can do? Nothing. Like the vote. What you can do? Nothing. Are you following, guys? So the standard names this 16. I have to put in the balance sheet. So let me redraw the balance sheet neatly over here. In my liability side, consolidated balance sheet, if I redraw now, my share capital will remain at 150. My other liabilities will remain at same addition, how much? 320. But when I knocked off, I got a balancing figure of, which is nothing but out of my balance sheet, what doesn't belong to me. So it belongs to the, I want that word. So don't discriminate. I want that word. What is that? It's called minority. The interest of minority in this business, it's called minority interest. Are you following, guys? So on the date of consolidation, what doesn't belong to me is 16. So I have introduced the new term for you. Overall, we have learned how to compute goodwill or cost of control. I have also taught you how to compute capital reserve, either goodwill or capital reserve. This or that will come. And when will minority come? If you have not acquired 100%. In example 1, 2, 3, we took 100%. No minority. I am the full majority. Anything less than 100%, 90, 80, 70, 60, 55, anything more than half, that difference is called minority. Now in my balance sheet of schedule 3, where to show this, sir? Is it share capital? No, it's not my money. Is it reserves? No. This is something I have to pay to outsider. He is my outsider, so it comes under my liabilities. It will come in consolidation, it will come in a separate item called minority interest. Are you following, guys? Understanding? Hello? Clear, guys? So we are done now with 4 examples where each was different, but now we can have a sum with combination of all also can come. Not combination of all, either goodwill or capital reserve with minority. How to deal with it? Are you following, guys? So now can I say how I computed goodwill is what you goodwill or capital reserve. How I computed is what I paid versus what is the value of what you got. Correct? What I paid 5 lakhs for Dhoni's bat, but the value of what I got is only 10,000 rupees. So goodwill is 4 lakh 90. Let's rephrase to accounting terminologies. Goodwill or cost of control or capital reserve is what you paid. In other words, how much you invested. That 80. Correct? Investment. So cost of investment that I paid to get share in subsidiary minus this is nothing but value of what you got is called what, guys? Net assets. Asset minus liability is what, guys? Net assets. Or share capital plus, both are same. Correct? Either asset minus liability or share capital plus reserves. Both are the same. Are you following, guys? Okay. Are you understanding this? Hello? This you have to compute in every sum. Do not expect a consolidation question to come without a requirement of computing goodwill or capital reserve. In simple logic is, if you paid more than what it is worth, it's what? Goodwill. If you paid less than what it is worth, it's called capital reserve. How to find what it is worth? Net assets. How to find what I paid? Cost of investment. This is the equation, formula in the book. Are you getting it, guys? Everybody with me? Guys, there is so much left in the chapter. We are only in the first class. I don't want to dump everything onto you. We are only in the initial set of concepts. Okay. Now, yes, Vignesh. Example 2, goodwill, yes. $80 is the net asset of the subsidiary. Okay. Now, let's go to illustration 1. Illustration 1 came in the latest exam for 5 marks. It's very easy once you learn how to do this. But before we get there, I need to teach you a few things. Okay. Now, follow, guys. Today we are going to finish illustration 1. Illustration 1 over means computation is same in every sum. Are you able to follow till here, guys? Now, my question to you is, let's say I have year 1, year 2, year 3, year 4, year 5. Correct? Should I do consolidation every year, or I can do 1 year and say same for all years? Every year, because think, what is consolidation? Line by line addition of items like PPE, other liabilities. Those items value will change every year. So I have to do addition every single year. Correct? Now, therefore, every year when you are doing consolidation on the year ending, correct? I do on the year end. That means, will minority interest change every year or it will remain the same? Will it change or remain the same? It will change. If the assets increase, see, if first year PPE was 100, your share is 20% of 100. If second year PPE becomes 150, your share is 20% of 150. So it has the potential to change, correct? Are you understanding, guys? Okay. In other words, can I say out of net assets into minority share is minority interest, correct? No, sir, I'm not following. Look at this. What is that in this example? What was my net asset? Here, we did 100 into 20% plus 50 into 20% minus 70 into 20. Let me first find the net asset. 100 plus 50 minus 70, how much? 80 into 20% is how much? Are you, instead of doing 20% for each, total I will do in the last step. Are you following? So net assets into minority percentages, minority share, minority interest, correct? Minority interest is the right term. Are you following, guys? So you know how to compute minority interest. Are you following, guys? Now, same example. Follow last one, guys. One more core concept. After this, we can do multiple sums. We can do multiple sums after this. Is it too much for the same day or it's fine? Hello? Are you guys able to follow online? Not understanding, Lakshita? Clear? Comfortable? Hungry? Hungry, we can't do anything now. We have to wait. Okay. Follow, guys. Now, next thing, next logic. I'm giving you the last scenario, last example for the day, example 5, and then we will straight away get into doing sums. Another 30 to 40 minutes, that's it, you will get full control over consolidation. Are you all with me, guys? Do you want to first go and compute minority interest or do example 5? Which one do you want to do? Do the sum or finish the example 5 and come and do the whole sum? We will do the sum together fully. Okay, fine. Whichever answer I hear first, guys, first in first. Okay, fine. Follow now. Example 5. I'm going to ask the question without you knowing the logic for it. Just try to guess. Minority interest will change every year, you told me. My question, this goodwill or capital reserve that you compute, will I compute for each year? Or it will once computed remains the same forever? What is the answer? It remains the same. Let me explain. It will remain the same. You should just compute once for every company. That's it. It will remain the same. Let me explain this. 2000, let's say 15, holding company got 100% of subsidiary. Are you following, guys? That time subsidiaries net assets was 100. I paid 170. So what is my goodwill? That's it. Goodwill is 70. What I paid extra. Next year, what I paid will not, this is 2015, let's say 2016, what you paid will not change, but net assets can change. Net assets became 120. Can I say goodwill now is 50? Are you getting the question, guys? Year 1, I did like this, goodwill was 70. In year 2, I am saying 170 minus New net assets 120, therefore goodwill is 50. How many of you saying yes sir? Makes sense. Understanding? Okay. We are going to break this down. How many of you are confused here? That only I want. How many of you are confused? You have to be confused at this point. What is the answer, sir? I am not able to understand. Goodwill 70 or 50 or only 70 or I need a clarity. That is the last stage of discussion. Before we go to next set of examples, look at this. I am writing balance sheet. Let's say acquisition year, when holding and subsidiary relationship was established, was in the year 2015. So in that year, in the year 2015, I am writing both the balance sheets now. Holding, I want the same numbers as example 2. Example 2, same numbers guys. Share capital, other liabilities, 250, total 400, PPE, investments 110, current assets. Example 2, do you remember guys, where we got goodwill? That is important for me. Okay. Balance sheet of subsidiary in example 2, all examples it was the same. Share capital 80, other liabilities 70, current asset is 50. So from where you are taking, Vignesh, you have doubt. I have taken this multiple times. Same number. For example, fifth time I am doing. Okay. Now, in this case, if I do consolidation, now you are in a stage where on the face of it you can tell, okay sir, for 80 you paid 110, so my goodwill is 30. Are you able to tell this guys? Example 2, look at example 2, goodwill is 30. This is in which year? 2015. Sir, what sir, you went 10 years back, 2015. This is when the consolidation took place. I got 100% shares. Are you following guys? Now let's fast forward 2 years or 3 years. Let's say we are now in the year 2018. I am now in the year 2018. Both these balance sheets will change. Correct? May change, may be similar. So let me write the new balance sheet for 2018 of holding. This is the, I will call this as date of acquisition. Why do I call it date of acquisition? The date on which holding subsidiary relationship was established. Will this be balance sheet date of acquisition? It can be any, it can be for example 15th September 2015, can be any date, because you find this on the date when you purchased. Correct? I'll explain, I'll spend time guys. Now come to 2018. In 2018, share capital let's say remains the same, 150. Other liabilities let's say it became 300. So total is, are you following guys? It's changing after 3 years. Of course it will change. This is example 2. When is the value? On the day consolidation, sorry, on the day acquisition took place. On the day holding and subsidiary relationship is established or created. Come down. Later, after 3 years, PPE is let's say 170, random numbers. Investment, will it be the same or it will change? Same. I invested 80, it is going to be 80. Sorry, 110, you are right, 110. So current asset is how much guys? Current asset is what? 170. Randomly I wrote. Subsidiary limiteds, balance sheet, share capital, yes Lakshita, tell some number, 90. Reserves and surplus, company is growing, correct? 80 became 90, company is growing, or for simplicity purpose let's keep share capital as same. Reserves and surplus 40. Other liabilities, Lakshita now tell some number for other liabilities. Yes, 50. Total. I hope it's not same total as that. No. Okay, 170. PP, yes, Lakshita, number 200. PP number, guys, how 200? 100. Current asset will be 70. Same PP. It can be anything, guys. Tell any number means reasonable number. Okay. Yes. Got it, guys. This is in 2018. This is date of consolidation. Now, I will do line by line addition. But when I am computing goodwill, I told you, I have to compare what you paid versus what is the value of what you are getting. Are you getting what I am saying? I am repeating. When I compute goodwill or capital reserve, I have to compare what I paid versus value of what I get. Correct? Now my question to you, if you get this logic, consolidation unit 1 we are almost done with the core concept. After this only adjustments, each sum one new adjustments, how to deal with it. Now left hand side will be 110, correct? Because what I paid is not going to change even if 100 years get over, because what I paid will be what I paid, correct? To buy Dhoni's bat I paid 5 lakhs. Whether you paid 10 years back or you are paying now or after 5 years, what I paid will remain will be the same. Hello? Getting it? Not following. Now this side, should I compare this? My question for you guys, should I compare this 110 with this balance sheet, this share capital, basically this 80 and say goodwill is 30, or should I compare, let's say Lakshita itself changed it, if I say for example 90 30, okay, should I compare with this share capital and say goodwill is 20? Are you following my question, guys? Are you getting the question? I want you to think, should I compare with this and say no sir, goodwill is 30 only, take 2015 comparison for the year 2018, or in the year 2018 forget about 2015 and compare 110 with 90 and say goodwill is 20. If you get this, half the chapter is over, guys, logically. How many of you 2015 old comparison? How many of you compare this 2018 when I am doing? Mixed answers, let it remain mixed. Recording, participate, raise your hand, think of some answer. Those who don't know consolidation also, even if you know, we are learning with so much logic. Now I am going to tell you some other irrelevant example, then we will come back to this, but you will all get the answer. Okay. Let's go back to the year 1990. Most of us were not born. Okay. Fine. Anybody born means okay, fine. Welcome to the class. Okay. Hello, sir. Okay. No. 19, just joking, guys. Okay. 1990. Let's go to ICA, sir. What, sir? Doing time travel and going to ICA in 1990 also. Okay. ICA, let's say we go to Nungambakam, Chennai. ICA, the same building. Everybody has gone there at least once. If you are from Chennai, not from Chennai, when you come here, do sightseeing. Okay. Now, Nungambakam, Chennai ICA is the center, that location, that road is a center hub, correct? Center hub in terms of real estate property, that ICA building will be worth crores. It will be worth so much crores, correct? Let's say in 1990, Lakshita did time travel and went back to 1990, okay, and she purchased this full land so that ICA will not come there, okay. She purchased the full land in 1990 for how much? That time, how much it will be? 10,000 is too less, let's say 10 lakhs. See, it can be anything. In 1990, ICA Chennai, that big building, is worth 10 lakhs, or even if you are from Guntur or Vijayawada, just visualize the ICA, you know. Okay, 10 lakhs is the value. That time she paid 10 lakhs. That time the value was how much? 10. She wanted, why she went to time travel? Why she went back? To buy that land. She doesn't want ICA to come there. So she paid that person, I will pay you 15 lakhs. Sorry, how much, what is the worth of the land? I'm just rephrasing the example, little bit change. The worth of the land that time is, she purchased it by paying. So she paid extra 5 lakhs. Case 1. She went to that year, she somehow bargained, she's excellent in bargaining, and 10 lakhs worth of land she got for 8 lakhs itself. Already time travel bonus plus she purchased for 8 lakhs. Gain she got is, so either case guys, she purchased for 15 lakhs, got a gain of, got a goodwill of, paid extra 5, extra I paid is 5, or got a gain of 2. Then she did time travel, came back to 2024. Now in this place, ICA and all is not there. She built some theatre or something else. But whether ICA is there or theatre is there, whatever is there, land value will be the same. Nungambakam main road, whatever. So today, this land is worth, let's say 50 crores. Today, if you want to buy that, you have to pay 50 crores. Center of the city, guys. Land with building, 50 crores. You have to pay. Rahul is saying, yes, give it to me, sir. I will buy. Okay, 50 crores. Fine. Now, my question to you. In case 1, can I say, Lakshita, in this transaction, she is yet to sell this land. She still has it in her own books in historical cost or revaluation, whatever she has in her books. Now, today, people are asking her, hey, in this land, how much more did you pay to buy it? Will she answer in case 1? Will she tell, I paid 15 lakhs for a land worth 10 lakhs and I paid extra 5 lakhs? Or will she tell, I paid 15 lakhs only for asset of 50 crores, 49.85 crores is my gain? Which she will tell? Which is reasonable? Option 1. Whatever happens today, in the transaction, what is the extra you paid will remain at 5. Correct? Or in other words, if I tell in 1990, Lakshita made a profit of 2 lakhs, something worth 10 lakhs she got for. So in 1990, she made a profit of 2 lakhs. 1990, Lakshita made a profit of 2 lakhs. Today, when I ask her, hey, what was the profit you made when you bought this land? Listen to the question carefully. What was the profit you made when you bought this land? Will Lakshita tell, the profit I made when I got the land is 2 lakhs, or she will tell 50 crores minus 8 lakhs, 49 point something is the profit of 2 lakhs. So then what about this 49 crores? That is also profit after buying the asset. Correct? So I will split my profits into Lakshita example, either 2 lakhs profit or 5 lakhs paid extra. This will never change because this is what is paid extra or what is the profit I have on the date of the transaction. Whatever you earn later are subsequent profits or losses. So when I ask you, when you bought this land, what was the goodwill or capital reserve? Will you say 2 lakhs and 5 lakhs or 49 crores of 2 lakhs and? Now come back to our example. When you bought this company, when you acquired 100% of this company, my question is, when you bought the company for 100%, your gain or loss is in the terms of goodwill or capital reserve or goodwill. Now you tell me, will I compare 110 with current balance sheet, or will I compare 110 what I paid with the balance sheet on the date of buying. Balance sheet on the date of buying. I didn't tell the answer. You told the answer. Now Vignesh is asking, sir, what about the subsequent profits? That also we will compute. But I will break it like goodwill or capital reserve is what I paid that time. Whatever I earned later after I bought is my profit. That is my revenue profit, which is nothing but sitting in the form of my reserves over here. What I earned, see, when you purchased, did you have reserves? No. After purchasing, you got reserves of 30. That is what I earned after purchasing. Here I am not bothered about what is happening after you purchase. I am only bothered about when you purchased, how much you paid extra or how much profit you got. Are you getting it, guys? So I will write two equations. Tell me if it's correct or wrong. Computation of goodwill or capital reserve is equal to, you tell me if it's correct or wrong, cost of investment. Our example 110 minus what did it, guys? 80. What is 80? Asset minus liability minus net assets on which day? On the date of acquisition or date of consolidation? On the date of acquisition. Are you following, guys? Second, minority interest is equal to net assets on which day? Net assets on which day? Minority is what doesn't belong to me. This will keep changing based on the net asset. So I should take net asset on the date of consolidation into minority share. Are these equations correct? Hello? Today's learning for the last 2 hours or whatever time this class went is for you to not mug up but understand this equation. These 5 examples is for me to communicate this. You can mug up, but you are going to struggle. I am going to give for consolidation, you can write down this, but later next class I will give you for consolidation one 10-step approach. Step 1, step 2, step 3. You just follow those 10 steps. 10th step, you will get the consolidated balance sheet. These are middle few steps. So first let me teach you the steps. Then we can go, I can give you dictate those 10 steps. Are you following, guys? Everybody with me? Now keeping this equation in mind, how many of you understanding the entire equation with logic? Now we have to apply in exam, we have to apply that. Here let's look at the question. They're asking this for, basically we need 1, 2, 3, approximately 12 answers we will get. I will do first case. There are 4 cases. I will do 1 case. You will do the remaining 3 cases. Look at this. From the following data, determine in each case how many cases we have. Case 1, case 2, case 3 and illustration 1 in the study mat. Latest exam 5 mark question. Not 5 or 10 marks someone told me. I don't remember. Anybody wrote, you can tell me. Anyone? No? Okay, leave it. From the following, calculate minority interest at the date of acquisition and date of consolidation. Now simple. If question is silent, minority interest should be computed on the date of consolidation only is correct. But in this question, he is saying compute in both days. So we will compute in both days. And is asking compute goodwill or capital reserve in each of these cases. Amount of holding company's profit in consolidated balance sheet, assuming holding company's own P&L is 2 lakhs in each case. I will come to that. I am yet to teach that part. Leave the third part. You know first and second. I will do case 1. Allow me to do case 1 and then you can run quickly and do case 2, 3, 4. Follow. Case 1. Compute minority interest on the date of acquisition and date of consolidation. What is the equation we saw? Minority interest is net assets into share. Correct. So, date of acquisition, date of consolidation. Case 1. What is the net assets on the date of acquisition? So he didn't give what to do. He didn't give assets minus liabilities, but he gave share capital plus reserves. So I can add share capital and reserves and take how much, guys? Here 1,50,000. 1 lakh plus 50,000. Correct? Net assets I am writing. Net assets on date of acquisition. What about date of consolidation? What are the net assets, sir? 1 lakh share capital plus 70. Correct? How much you are getting? 1,70,000. Are you all able to follow, guys? Hello. Next, what is the minority share? What is the minority share? A is holding 90%, so minority is 10%. So minority interest at 10% will be 1,50,000 into 10%. 15,000 if I compute on date of acquisition, and here into 10%, how much, guys? 17,000. Are you following? That's it. Over. Are you understanding? Let me go cross check the answer. 15,000, 17,000. Clear, guys? Now you have to compute goodwill or capital reserve. Think, what is goodwill or capital reserve? Now goodwill or capital reserve will come on which day? Acquisition and of consolidation. So here I can put hyphen. Not applicable. Basically it is not applicable, meaning whatever I compute here will remain as the same value forever, unless shareholding percentage changes, which we don't have in our sums. Okay, so leave that part. Final syllabus, I don't want to confuse you. This is that. Are you understanding? So goodwill is nothing but net assets on the date of acquisition into nothing. It is what, guys? What you paid minus what it is worth. I am just waiting to see how many of you will do into 90%. No. What I paid is how much, guys? It's given here. 1,40,000. How much is the company worth? 1,50,000. So, look at this. What I paid is 1 lakh. What I paid is 1,40,000 to get how much company share? 90%. 90% I paid. I got 90% by paying 1,40,000. What is my net asset? 1,50,000. This represents 100%. Correct? Can I compare? Are you getting it? See, what you paid is 1,40,000, which represents 90%. Then I should compare it also with what I am getting worth of 90, because remaining 10 you just now computed. What is that? Minority. So I should take 1,50,000 into how much, guys? Into 90%. How much? 1,35,000. So something worth 1,35,000. How much you paid? 140. So you paid extra 5. What is extra 5? Goodwill. Let me go cross check. First case, goodwill is how much, guys? 5,000. Look at this. I paid 1,40,000 for something which is worth 1,35,000 only. Why 1,35,000? What I am getting control is 1,50,000, but I am getting only 90% of that. So the difference will be goodwill. Are you following, guys? Vignesh, understanding? Sure. Everybody clear, guys? This is case 1. You have to do case 2, 3, 4. One by one. Finish case 2, then go to case 3. Then finish case 3, go to case 4. Still we have a lot of concepts, guys. Sir, what happens to profits earned? I'm yet to teach all of that. Okay, yet to teach all of that. If you're able to do case 2, 3 and 4 comfortably, you have control. Everybody done copying with this? Case 2, 3 and 4. Quickly, guys. Don't get confused. If you're taking minority, first to do minority for case 2, 3 and 4. Then you do goodwill or capital reserve for case 2, 3 and 4. Don't mix it. Take one, finish it. Same logic, guys. Do it fast. It's a past exam question for 5 marks. I'm not joking, guys. Promise 5 mark question. Take the question paper and see. Old syllabus, last attempt. This question was there for 5 marks in exam. That too mandatory question number 1. You have the equation in your note. You have this. If you are done for all the cases 2, 3, 4, put your hand up, guys, including online. Let the others know you have understood. Yes, Vignesh. How minority interest is 10%? I have 90%. Overall 100%. So others have 10%. Quickly, guys. Vignesh finished all 4. First time you're doing this chapter. Finished. Good. First time finished. Put the hand up. Come on, Murugan. Strike his note. Strike what you're doing. Strike his note first. Strike it. Strike it with red pen. Put the hand up. Recording students, everybody put the hand up if you are done, guys. If neighbors are not putting the hand up, if they are done and they're simply sitting, take the pen and strike it. Let them write again. Strike it, guys. Simply don't strike. Yes, we have 1. I want to know the count. That's all. 1, 2, 3, 4, 5. Offline 5 are finished. Online, if you're done, you can put the hand up, guys. Communicate to me in chat, done. Or put that hand in Google Meet or Zoom, whatever. Fast. Online, if anybody is done, put the hand up. Online recording, I'm just doing this for you guys, for you to know how many of them are finished. All the 5 students whose hand is up is learning for the first time, guys. Finished. Online, Sandhya has finished. Online, we have Hari has finished. Okay. Jayashri finished almost. Shaira has finished. Perfect. Online also I can see many hands. Yes. Okay, perfect guys. Let me randomly do one case. Let's say if I take case C, minority interest. Share capital plus profit loss. 50 plus 20 is how much, guys? In that 10% is how much? Sorry, 20%. Because 80, 20%. How much, guys? 14. Similarly, here also it is 70,000 into 20%. How much, guys? 14,000. Come down, check your answer. 14,000, 14,000. Are you following up? Case 4. Will minority come? No, because you purchased 100. I told you if you purchase 100, how minority will come? There is no minority. Okay. Similarly, let's do randomly case 3. How to find goodwill? I told you goodwill is what you paid. What I paid is 56,000 versus what you are getting. What I am getting is 70,000, but 70,000 represents full value. What I am actually getting, what I am actually paying for is only 80%. Is how much, guys? How much? 56. So 56 minus 56, goodwill is, it's like example 1. There I gave 100%, here percentage. Case 3, goodwill is nil. Are you following, guys? I am just in one more case. Quickly cross check your answers. Minority interest in case 1, 2, 3, 4. These are the answers. Same way here. Goodwill or capital reserve in case 1, 2, 3, 4. Only case 2 has capital reserve. Case 3 nil, case 4 goodwill. These are the answers. I hope you cross check. How many of you got it correct? That's it. Give yourself 5 marks. Exam question. I know third part is pending. I don't want to dump a lot on you. So today what you have learnt in consolidation, guys, what we have learnt in consolidation is very simple. We have learned that step 1, consolidation is nothing but line by line addition subject to setting off and computation of 2 things. One is you have to compute goodwill and or capital reserve, and if applicable you have to compute minority interest. That's it. Consolidation is nothing but what we did now is an adjustment in a big sum. So consolidation is nothing but line by line addition. All the summary of the 5 examples tells us it's line by line addition subject to computation of goodwill or capital reserve and subject to computation of minority if it is there. We basically spend this time to understand this equation in depth. This is not going to change how many ever sums you do. Why these terms are important, on which day I should take all of this. Okay. So lastly, let me ask some questions. Let's see if you know that. Consolidation is prepared on which day? Balance sheet date. Whichever date you're preparing balance sheet, that date. On balance sheet date, will I compute goodwill or capital reserve again every year? What I computed first on date of acquisition will remain the same unless percentage of holding changes, that we don't have. So leave it. It will remain the same. Minority interest is computed on which day? On date of consolidation and computed on a yearly basis. Will this change? Yes. Based on the net asset value, this can change. Are you following, guys? We have in syllabus consolidation of holding with subsidiary, holding with associate and joint venture. This is a law question. If I have H having S1, S1 having S2, who will do consolidation? H will do for S1 plus. Should S1 do for S2? Exempt as per Companies Act. Section 129 of Companies Act says consolidation, if it's done by the ultimate holding, middle companies need not do. But it's not there in our syllabus because we don't have multiple subsidiaries. But if it comes in MCQ, law answer, its answer is there in paper 2 law. Consolidation is for the ultimate holding. Are you following, guys? Clear? Still we have 1 or 2 small concepts. If I do that, we can start doing the big sums. With this session of consolidation I'll end. I want you to understand what you're doing here. Before you come, you can go and practice not many sums. Actually, I still have to teach a few more concepts. But next class, we will start doing full-fledged big sums. So with this, done with consolidation, guys. For today, thank you.